Alright guys, how's it going? I think I set up my broadcast right this time, I believe. Should be able to see everything. Let me know if you can hear me and see my stream. Give it a few minutes and then I'll start the market review, probably in like 2 minutes. That voice sipping after a dub today, yes sir. Is it echoing hard? Okay, it might be because my mic has a reverb to it. 1 second. Are we still echoing? I really need to figure out YouTube. What's up, Dominion? How's it going? Am I still echoing? 3 a.m. Oh wow. Okay, no, I think it might have been me actually. It might have been me, to be completely honest, because I had my volume on my like I'm watching the YouTube stream as well to make sure like it's starting properly, and I'm pretty sure that was my fault. All right, I'll start it at like 10:05ish, just like give people a few minutes to show up if they want to come, and then I'll also record it so that it's like on after. How's everyone's trading day today? So I'm gonna go and watch the stream at the same time so I can answer your guys' questions. One second, I have to pull up the stream. I'm really terrible at each, but I will get better at this. It's my first couple times doing it. You passed your 150K apex, but did monthly instead of lifetime. Oh, that's tragic, dude. It's okay. Oh wait, it's with the sale too, right? That's tragic. I'm sorry to hear that, bro. How much is that monthly, by the way? Is it like cheaper monthly as well or no? 105? Damn, that, you know what you could probably do, bro? You could probably email them. Yeah, you could probably email them and be like, I absolutely fucked up. Be like, I accidentally did the monthly instead of the lifetime. And you know what? They're probably gonna be pretty forgiving. Like Apex is known to be like pretty decent with that kind of stuff. I don't know if you can change the contract like once you enter it. I have no idea, but that'd be cool. I mean, there's no shot in like there's no harm in trying, right? I would try both ways, just in case they're nice to you. But yeah, that is a little bit unfortunate, to be honest. I'm sure, yeah, submit that support ticket and see what they say, bro. Like, I'm actually curious to see what they say, because if you just made a mistake of clicking the wrong thing, they might just charge you one time for monthly, and then after, they'll be like, yeah, I feel bad for the guy. Like, we'll maybe give him lifetime. The reality is that a lot of people don't let their PAs last longer than a month. It's the truth, like, the real, like, unfortunate reality is that most people just it doesn't even matter because they're going to end up blowing it regardless. But, yeah, it's not, you don't want to do it if you don't have to, or you don't want to have to blow your account if you don't need to. Okay, let's hop into this market review. So let me start off with a blank chart, guys, just so we can go from the top down. You guys saw all my annotations earlier, but we'll start with a blank chart. Okay, also going to get rid of these indicators and just give us a nice clean chart. So moving into the week, right, we were framing today as a high probability expansion day because we had our economic drivers and also because of the way the weekly candle was printing, you know, moving into today. So let's take a look at what we saw and kind of go from the top down. So let's start on the daily chart. On the daily chart, what we noticed is that Monday created the potential, right, manipulation lower to potentially form the low of the week. And the reason why we can anticipate that is that we traded into this daily internal range of liquidity, right? This was a daily fair value gap. Also, we want to be paying attention during expansion weeks in the market, right? For this sort of expansion here is also going to result in a weekly fair value gap forming. So in addition to having a daily key level, we also have a weekly key level right here. So we have our weekly inefficiency. This is our daily one. Let's draw in the weekly one on top. So we have some stacked levels, right? Okay, so as you can see, on Monday, we traded into our weekly and daily level. Now this was interesting to us because if we go down to that daily chart, we're gonna wanna look for two things always, right? If we're considering a reversal in the market, we always wanna see one, some sort of higher time frame imbalance or swing point, right? Institutional swing point, which is gonna be the same thing as saying ERL. And we also wanna see an SMT within that higher time frame PDA, right? Without those two things, it's harder for us to gauge a reversal in the market, even if we have market structure. So the first two things we do is we evaluate if there's SMT, and within that SMT, or within that imbalance, if there's SMT, right? And both those things will then give us the bases to look for a reversal in the market. So as you can see, on Monday, we had that condition that's met. We trade into this daily imbalance, right? Into this weekly imbalance. And we also liquidate these relative equal lows. And we talked about these equal lows last week on Thursday when we got that market structure shift, that changes day delivery lower. So you can see the market traded into that liquidity and formed, right, our SMT divergence. So between the ES, the YM, and the NASDAQ, we got this weekly internal range liquidity divergence, which is perfect because that's the first thing we want to evaluate when we're considering a reversal in the market. Right, higher time frame array, we had that SMT, and now we want to look for structure. So going into our structure, right, down to the 4-hour chart out of this weekly array, we can actually frame a very nice market maker model, which was something that was on my eye for the majority of the week, right? If you guys have been following my Twitter updates, I was really looking for this buy side liquidity up in here, right? Let's go to the daily chart and we'll show you. So we have this imbalance on the daily chart. This is a daily sell side imbalance, buy side inefficiency. So if the market is going to be reacting off of this bullish series of arrays, right? This daily fair value gap, this daily internal range of liquidity, and these swing points, right? This external range liquidity low, then this daily inefficiency is a good target for price to draw back into because, as you can see, it rests in premium of this dealing range. So if we look at the displacement range from this high down to this low, right? We can see that this daily imbalance actually rests in premium. So it's a high probability target for us, right? If order flow reverses. Now, in addition to that, right, that premium array, what we also see is that we have this nice consolidation, right? So above this consolidation is gonna rest our buy stops or buy side liquidity, whatever you wanna call it. So we have our buy stops, right? We have a very nice original consolidation on the 4-hour chart, which we can mark out right here. And in addition to that, we have our weekly internal range of liquidity being traded into. So consolidation, right, on the 4-hour chart, weekly internal range liquidity, SMT inside of it. And then what we do is we zoom down, another time frame, and we start to see if we can get structure to qualify, a move into this liquidity. I also, if you notice, had this target on my chart from last week, which was going to be this wick low right in here, right? So this would be the key level I was also aiming for, which we actually just traded into like this evening, right? During the presidential debate, we just came into this key level, which is awesome because, price delivered exactly to the levels we talked about. So how could we frame, and trade around this idea that price wanted to reach into these buy stops, so this buy side liquidity, and how do we actually structure this 4-hour market maker model? As you can see from this 4-hour chart, what we're doing is we're waiting for some sort of displacement out of this array. Now the nice thing is that if we look at the days of the week, right? Here is Monday. Let's mark out Monday, right? And then we have Tuesday, all the way market closes, let's say right there, right? And you can see in between Monday and Tuesday, actually you can just see it on your chart here, we also form this significant swing point, right? And this swing point is also a daily swing low, right? The daily previous day low, for example, here. Divergence. So that means that the ES does not take out this Monday low, but the NASDAQ, interestingly enough, it does. So now we're forming a higher time frame SMT, and then we're forming a lower time frame SMT at Monday's manipulation low. So these two SMTs, which I've talked about before, right? Higher time frame SMT, lower time frame SMT. That's a very strong indication of reversal at the market. So once we get this expansion move higher, as we saw on Tuesday, we're looking for something in terms of a weekly profile, right? And we're looking to actually frame a change in state of delivery. So once we get this move higher, you can see we have a couple of things we can annotate. We can call this down here, right? That area where we have SMT again, right? SMT, SMT, our smart money reversal. We have a draw on liquidity here. And we're also, right, using this 4-hour projection from last week in a likely reversal area, that 3.5 to 4 standard deviations from that Thursday manipulation higher, right? You can see it on last Thursday, and then trading into our key levels. So we have a lot of arguments in this area to expect or predict a reversal. So what we end up doing now is we end up waiting to see that align with structure. And on the 4-hour chart is where we get that structure really coming in, because we have a nice market maker model here, and we get this 4-hour change in state of delivery. So what is the change in state of delivery? That's a question I get asked all the time. A change in state of delivery is the activation of a bullish order block. So what we want to look for is the consecutive series of down close candles into our institutional point of reference, i.e. where we're framing our reversal from. And then once we have that institutional level, in this case, the daily imbalance, the weekly imbalance, and the SMT, we want to look at the series of down close candles into there and wait for price to trade through it. Once price trades through that series of down close candles, we call that a change in the state of delivery, and that becomes our order block. So what we want to do is evaluate a couple points inside of this order block. Obviously, we want to evaluate the large displacements that we create inside of it. So this right here is a 4-hour imbalance. It's a buy side imbalance, sell side inefficiency. This can also be thought of, right, as the low risk entry. This would be the LRE, or the low risk buy in this case, of a market maker model, right? This is the smart money reversal. This is that low risk entry as it comes back in. Some might even treat this down close candle, right, into this inversion fair value gap as a potential low risk entry. Depends on how you want to frame, right, your market maker model, but that's potential as well. This is anyways, regardless of how you characterize it in terms of phases of a market maker model, this here is an accumulation where the market trades back into this order block. So if we also mark out, the mean threshold of this order block, you're gonna see we almost tag it. We miss it if we use the bodies, and we hit it if we use the wicks, right? I tend to use the bodies and not the wicks, but both ways you can see we come exceptionally close to that mean threshold of this series of down close candles, right? So that's gonna be our order block, and that overlaps with our imbalance. We also have this inversion fair value gap in here, right? Signifying that order flow has shifted and we now have several bullish PD arrays protecting price. So how do we get involved in this price move? Well, you can see that yesterday, right, we put in, it's higher time frame power of 3. Sorry, I did see your question. It's higher time frame power of 3 by 2 degrees. So I can pull it up. It's this indicator, PO3 Pro. There's also one by Foddy, which is free, but I recommend using the 2 degrees tools. They're really good. Okay, so now you can see that price trades back in after shifting delivery state into this imbalance, and we actually leave a couple of signatures in price that make me extremely bullish for today. So yesterday you can see the market really just accumulated back into our area of interest, right? This order block, mean threshold, and this 4-hour imbalance. Now, in doing so, we also did something quite interesting. We created a series of relative equal highs in the market. So we can refer to this as inducement. We're inducing sell-side liquidity, right? We're inducing sellers. As you notice, we created several equal highs that were failure swings to our draw on liquidity, which was this buy side target. So if we consider that the weekly candle might be reaching to internal to external, the daily might be reaching into this inefficiency, sorry for all the annotations, we're now seeing on the lower time frames that we're creating relative equal highs opposing, right, the manipulation, which is a very strong sign of manipulation. These equal highs, this failure swing. So coming into today's session, I was only looking for longs. And I was only looking to frame a buy scenario into my area of interest, this original consolidation of this 4-hour market maker buy model. So how did I approach that? Well, first of all, what I did was I waited for our session to open, right? So let me get rid of these levels because you can see we traded through them. And I saw that during the London session, in the overnight session at around 6 p.m., we came in and we swept out the previous day low. So you can see that we had, or the session low, right? So when the market closed here, we had this previous day low. We swept this out. So this is a liquidity sweep. And I was also observing the fact that inside of that sweep here, we had, what do we have yet again? Another SMT divergence. So each time the delivery state of the market is shifting, right? In this case, from manipulation into expansion. We had accumulation here, manipulation. This manipulation phase is ending with an SMT inside of this 4-hour inefficiency, right? So that gave me more bullish confluence for the New York session. So as we traded up in the New York session, I refined down to a lower time frame to see if I could find an entry. Again, I was bullish after seeing this SMT, and several of my students actually got involved in price right here at this smart money reversal because they had the context, right, for this draw on liquidity. They saw the inefficiency, the internal range, and they saw the SMT, and they essentially bottom ticked, the market before that move up. Now what I did was I waited for the New York session because I knew we had news folders, and those news folders would provide, right, volatility injections in the market for me to be able to trade towards my draw on liquidity. So what I did was I marked out my imbalance on the 1 hour that I found interesting in this displacement leg higher. So you can see, right, in terms of order flow, as the night progressed in the overnight session, we were respecting and balancing, right, inefficiencies. So we were displacing, retracing, displacing once more, and respecting these bullish 1 hour fair value gaps. I talked about that in the stream this morning, right? Coming into the session, we had very efficiently delivered price from this swing point, right? Where we formed that SMT inside of this fair value gap. So this is our intermediate term low right here, which has a higher low to the left and a higher low now to the right, right in here. We can now consider these to be protected lows, and we want to see how price is treating, right, short-term lows as we move higher. As you can see, we're sweeping short-term lows, displacing, sweeping short-term lows, displacing. The institutional order flow was quite bullish. So moving into the 830 folder, what I noticed was this specific imbalance, I'll mark it out in gold, was my key level of interest. I wanted to see how price traded inside of this specific imbalance. As you can see, what do you think I'm going to look for? The same exact thesis, right, is being applied on multiple time frames. So to frame this reversal down here, I looked for an SMT inside of a higher time frame array. Then to frame this manipulation phase ending, I looked for an SMT inside of my 4-hour array. So now that I was refining down to this last stage of distribution in my market maker buy model, I again looked for SMT inside of this hourly PD array because I wanted the state of delivery to go from this manipulation into the last phase of expansion. So as you can see, inside of our fair value gap of interest, right before the news folder, which is at 8:30, right? We form, let me hop down a time frame to my entry time frame. Right? Once the news folder dropped, I didn't enter before because I was waiting to see some form of divergence. We form yet another smart money technique, right? Or SMT divergence. Once I saw that divergence and this displacement, I was confident that I could now trade this final fractal, right, of the entire market maker model we've been looking at. So if you zoom out, here's the original consolidation of this 4-hour buy model, right? Here it is on our higher time frame, keying off of the weekly level. Then we had this fractal in here, and I'm trading the second phase of this fractal on the 15-minute chart. So all comes down, right? So now we have this phase of delivery in here, which is another, fractal buy model and sell model. Once I saw this SMT form in here, we're very close to our draw on liquidity. So what I did was I used one of my favorite entry techniques, which I posted on Twitter earlier. If you guys want, you can go see it. It looks like this. A higher time frame array, right? In this case, we have the hourly gap, a draw on liquidity, which is going to be this buy side, and then I wait for an SMT and enter on the order block. So we have this order block right in here, or this could be called a change in state of delivery, whatever you want to call it, right? Perfect. As you can see, price comes back into this order block. Here's where I take my entry long. And I did this on stream this morning, so if you want to review the actual setup, go watch this morning's stream. It was on YouTube, it's recorded. And then what I did was I wanted to risk this SMT low and target the buy stops, right? So in addition to this final draw on liquidity, I also took partials at those levels we talked about, right? We had induced these relative equal highs here. So I took a partial off at around 45 points, I believe, from my entry. And then I also took another partial off at these relative equal highs that both served as inducement of liquidity. And then I obviously held, about a third of my contracts to our final draw. So by framing, right, the same model I use every single day, which is a market maker model, we can go from the highest time frame, right, which we started on, which was the daily chart and the weekly chart. If I hide all these, and we start on the weekly chart with the idea of price moving from internal range liquidity back into this range, okay? Maybe not all the way to the high, but back into this range. So that's the highest time frame analysis. Then on the daily chart, we can see we have a really nice imbalance that we can target, right, after we form a reversal here. Then we go down to our 4-hour chart, and we can frame our market maker buy model based on our time frame alignments, right? Weekly PD array, H4 MMXM. So I can see a very clear 4-hour market maker buy model. Fantastic. Once I have that original consolidation and my higher time frame daily array, which I'm targeting, all I have to do is refine down the time frames to get entries. So on Tuesday, I can use this news driver, right, after my change in state of delivery here. You guys saw me trade this on Tuesday as well. Right, here's my hourly order block. I can trade the first phase distribution of this market maker model. As you can see, we reach in, we put in relative equal highs. Then on Wednesday or Thursday, Wednesday didn't offer anything but consolidation, but on Thursday, right, today, you can trade the second phase distribution of this market maker buy model into the terminus, into the final target. So this was the first opportunity to get involved in this buy model, aligning yourself with order flow. And then here's the second opportunity to get aligned with order flow. As you'll notice, it's all fractal, right? So each time we're looking to get involved in these longs, we want to be refining our entries using the same concepts that we use in the higher time frame. So in here, what do you think we saw? Right? A higher time frame PD array, the hourly order block, and there's an inefficiency in here, right? The hourly imbalance. So let's call this, right, the low risk entry of this 1-hour market maker buy model. In here, we're going to see SMT, right? You can prove it to yourself by looking back in your charts and observing how price trades into the key levels of reversal. So as you notice, there's your SMT, right? Where is it? Is it with here? So that's the SMT, right? As price comes back in, we look at the Dow, and we're going to see the first SMT inside of the array, which is right here, where the Dow is trading below all of these lows here in the London overnight session. So that's our first SMT, another SMT on this retracement higher. So we're looking for the same signatures each time price trades into our PD arrays of interest, right, to go long. And And we're only looking for the higher time frame order flow. We're not interested in the retracements because those are counter the higher time frame trend. And then again, Wednesday was a bit of a chop fest. I went long in here, looking for the same thing because we had another 4-hour frag gap, right? I went long from this 4-hour imbalance, this one, and didn't get anything besides these equal highs being printed. The next day, we get the delivery we wanted to see. So I hope that kind of explains how I visualize price and how I approach trading market maker models. It's always the same process, right? I'm always looking to frame the same types of setups around key levels. So if you were to summarize kind of what I'm doing, it's going to be key level, right, which is going to be IRL or ERL, SMT, and then lower time frame or intermediate time frame market maker model, and lower time frame entries. And the entries are going to have the same thing that we see right on the higher time frame. Key level, intermediate time frame, plus SMT. Always the same 4 steps, right? And those 4 steps are going to lead us into taking these entries each time that we get involved in distributional phases of price delivery. So go and back test all my trades, right? Go see how I'm approaching the markets every day, and you'll see I'm always using that same 4-step approach right here. Key levels, SMTs in those key levels, and then framing market maker models that I can get involved in with some lower time frame entries. Nothing deviates from this plan. Obviously, we use tools like understanding the daily candle direction, etc., which we didn't talk about yet, right, so far in this review. But you can also pair that with using things like the daily candle closures from my last lecture, right? You can look at what's being respected, what's not, as you can see from the last lecture I did on Twitter, right? Wick below the previous day low. Where's the target, right? This high. Then you can see we wick above this previous day high, close below. So what's the target? Previous day low. Wick below the previous day low, close back in the range. What's the target? Previous day high, right? So you can see that the same logic I taught you in that Twitter lecture on daily bias is also being used here, almost identically. And we're pairing that with this lower time frame idea of market maker models and using those 3 perspectives, right? The long, intermediate, and short-term perspectives. So that was today's market review. What am I looking at moving forward? As you can see, right now, we still have this internal level of liquidity, and we have this external level of liquidity, right? So if the market continues to expand, we may reach into these buy stops, which would be external range liquidity on the weekly chart, right? Very similar to what we've seen in previous weeks. Internal to external. I'm also on this chart, have this consequent encroachment of this weekly wick marked out, because unlike last week where we created this high, I want you to look at the difference. Last week, we created these failure swings at the weekly high, traded into the internal range, and then came all the way up into that original consolidation. This week, we have created this breaker in the market, which is this change in state of delivery, right? All of these up close candles become an order block. So this is a higher resistance liquidity run because price now needs to trade through this order block as opposed to before where price created a swing failure. So all of this was low resistance liquidity, whereas in here you can see we have high resistance liquidity, which is why I have premium areas of this weekly candle annotated, such as this wick CE, right? What we can notice, however, is that if we look at the other index, right, which is ES, which has relative strength right now, it's much more likely that ES is going to reach in to this previous weekly high based on, right, its closure at the moment with strong displacement through this imbalance that we're seeing, right, on the 4-hour. We'll have to monitor if we want to potentially form an SMT at these highs. But moving into tomorrow, right, my entire chart can be condensed into just these few levels, right? So these few levels are going to be on my chart. Everything else I can get rid of, right? You can see on the daily chart, we closed inside of this imbalance, so it's still of interest to us. We want to see how far price can reach up. It doesn't want to reach into this weekly wick CE, right? What does it want to do? So that's what we're going to be monitoring going into tomorrow. So our charts are going to look relatively clean, and we're just seeing what happens inside of this premium area of price. Of course, we can also have, all right, let's make this smaller just so it's not in the way. We can also have a dealing range anchored from this high to this low, and we can see, where exactly price wants to reach into. Some people might have their optimal trade entry marked out here, which is going to be the ideal area potentially for a reversal, right? Which we're trading into now. And you can see that OTE of this weekly range, right? Low, high, or high, low, my apologies, right? Sweeps out sell stops. This swept out buy stops. So this is a displacement range. The OTE and the Wick CE line up quite nicely. So I will just keep that weekly Wick CE as a point of interest. On the ES, same idea, right? We can mark out this Wick CE. As you can see, the ES has relative strength here, which actually makes sense because where do we get the divergence, right? We got the divergence with ES inside of our weekly imbalance, right? So if you want to zoom out on the ES and the NASDAQ, you're going to see that the major liquidity that was not taken on the ES, that was taken on the NASDAQ, formed this large SMT, meaning the ES has relative strength. So once we form that SMT, you can see that we're not coming into the sell side liquidity. We're forming, right, an SMT divergence. And now ES looks stronger to reach into that previous week high. So tomorrow, if I take a trade, it may be on the ES into previous week high. The YM, as you can clearly see, is definitely the weakest, still trading far below, right, those same key levels. Look at the daily chart. The YM failed to even take out the all-time high and has been trading much more bearishly in this area of price. So yeah, that's kind of where my eye goes to for tomorrow. That was today's trade breakdown. Anyone have any questions? Merc, you're not late. Oh, I'll be recorded as well if you missed the beginning. I just went through the trade we took this morning. And if you guys want to see that trade, right, it's posted on my Twitter, and also the video for this morning's execution is also posted on my YouTube under the lives. So you can go back and you can study any of that if you want. But yeah, that was today's market recap. If there's no questions, I'll hop off, right? Let's let you guys go. And I'll be trading tomorrow as well with that expectation in mind, right? So on NASDAQ, we're looking at this weekly Wick CE. That's one level. And then we're looking at the previous week high. And we just want to see if we can frame some sort of move, a continuation, into potentially this weekly ERL from this weekly internal. Same thing. As always, same approach, right? We can now consider this to be an original consolidation of the market. I am going to favor trading the ES. If the ES gives me an opportunity to trade into this original consolidation, I will, because for me, this relative strength of this weekly SMT divergence favors longs on the ES. Today, I favored longs in the NASDAQ because obviously we had that really, really nice buy side liquidity target with many, many inducements of other liquidity, right? Equal highs there and equal highs here. So seeing all those equal highs, I had a bullish thesis for NASDAQ over the ES today simply because we had order paired highs to attack, right? So if we're order pairing sell stops with buy stops, then we have lots of buy stops and equal highs to target in the market. So that's why I chose NASDAQ today. And I think tomorrow I will be an ES proponent, right, for longs, simply because of how we're trading in relative strength, right? This is the same Wick CE on the weekly. This is the weekly Wick CE. Same exact thing, right? And you can see that we're trading right now through it. We're trading right now with displacement through it, whereas the NASDAQ is still below. And the NASDAQ actually still closed, right? If you notice, remember using my last lecture, if we look at the previous day high, we closed below the previous day high, and we also wicked into the imbalance and closed below it. Whereas the ES, although it closes below the previous day high, right, it does not have that daily imbalance to trade through, so it has lower resistance liquidity to come up to this high. Both of them have the bearish order block to trade through. However, the NASDAQ has all of this price here, this weekly Wick CE, and also this imbalance, which we can't forget about. So tomorrow my eye is going to be on ES for a continuation long. And yeah, let's see the dollar just to pair this thesis. right now, everything still looks quite bullish in the dollar, right? So I see we have this daily order block, which was well respected. So again, there's two parts I care about the order block, which is the open and the mean threshold. So you can use the wick here if you want, right? Or you can use the bodies. Price didn't trade into the mean threshold, but did close above the open of this order block, which is also positioned, notice, at the weekly open. So this is a time-based array as well. It's not just a price-based array. You can see that the week opens and trades lower, and once we close through that, notice how the bodies are holding above that weekly open. So this order block is a good candidate for a high probability order block because it's the series of down close candles, right? If you go to the daily chart, it's the single down close candle, or on intermediate time frames, it's the series of down close candles from that true open of the week, right? Or not the true week open, but just the weekly open, Sunday 6 p.m. that we've closed through. And then you can see price comes back in, refers to this order block, which is going to be on the daily chart, for support. So for me, price action looks quite bullish on the dollar, and we're looking now to see if we can come in and take out this failure swing. So the indices and the dollar are both moving higher, which is why there's a crack in the correlation, but the dollar, as you can clearly see, is in a higher time frame market maker buy model, right, to this original consolidation in the daily. So yeah, my thesis for the dollar is still going to be higher, but that doesn't mean my thesis for the indices is lower. Right now, I'm still going to monitor how we trade overnight from our key levels. That's why I like to study, right, how London trades, because it gives me information about the New York Open. I can use things like protraction profiles, which I didn't talk about today, but you guys can obviously study from some of my other YouTube videos about how we put in low of the day, right? We trade into it once again in the London session right here. London trades lower into this imbalance, then we trade higher. We come back into what? This order block or this breaker. Right, the breaker overlapping the fair value gap becomes our unicorn setup, and then we go long, right, at the end of the day as well. So you can see that here we're still respecting order flow, and even in the session, we respected order flow all the way up until, we traded into our higher time frame level. Okay, cool. Any questions? What do you think of 4th of July rally? I think that the dollar looks incredibly bullish, and the indices look quite bullish, but we'll have to see what happens here. So I don't know. We'll have to see next week. I think I'd still prefer to see higher time frame prior retracement after we come into our key levels. So maybe we take out this weekly high, right, on one of the indices, forming some sort of SMT. Then I still like the idea of coming back and retesting this down close candle, which is going to be in a discount of this dealing range, right? So if I look at this Fibonacci, right, I want to come back into this area of price, maybe potentially form something that looks like this, right? Dollar still has my eye to be bullish all the way up into these highs, and then potentially if it stays bullish up into these highs, right? They're all failure swings of the market in here. But yeah, we'll see. Right now, bias is still bullish on the indices and dollar. We'll play it week by week, and we'll use the structure we're offered to kind of support a thesis higher or lower each week. No point in trying to predict the market. It's better to just react to what we're being shown in market structure. That's how I always tell my students to trade as well, right? Predicting the market becomes very difficult to do. Okay, any other questions? If you guys like these market reviews, I don't mind doing them on YouTube. I do them in Discord too, but I think I'll do an occasional one on YouTube as well. If you guys enjoy them, just let me know in the comments. Let me know on Twitter next time I put a poll up that you want to see it, and I'll keep doing it. I like going through the day. It gives me a good reset for what's going to happen tomorrow, right? I just study this day's action, put it into my journal often, so I have some data to collect, and then I go on to the next day with kind of an idea of what's going to happen. All right, if there's no more questions, I'm going to turn the stream off, and I will see you guys tomorrow. Have a good weekend, everyone, and yeah, I'll talk to you next week. Take it easy. Bye, guys.